Why can't we chat?
Hey, Kristen.
Hi.
Hi.
Darnetta.
Hey, Darnetta.
Hello.
Hey, so yeah.
How come we can't chat?
Oh, we can. We're still waiting. I don't think we have a quorum yet.
I don't know what's
Do we,
wrong.
Sue?
My volume isn't up.
We can hear
Oh.
you.
Yeah, I
You
can
hear me?
very
I
well.
can hardly hear you though.
Okay.
Okay,
Microphone.
we are live just for information.
Okay.
All right. Well, I'm going to go ahead and start this meeting because we have a long meeting today. So it is 4:34 on November 19th. I'd like to call the investment meeting to order. Sue, can we take a roll call, please?
Yes. Angela Banks,
Here.
Christina Bennett. I know
She's here.
Yeah, she's on mute, but she's here.
I'm here.
Joseph Clark, Darnetta Clinkscale.
She's here.
Darnetta.
I don't know what happened to her voice. Her sound went down, I guess.
Darnetta, can you hear us? Okay. Okay, looks like she's working on her audio. All right. Lewis Cross.
Present.
Sheila Goodwin.
Here.
Donna Jones. Yvette Levy.
Here.
Bobby Richardson. She's unable. Albert Sanders.
Here.
Justin Stein.
Here.
All right. So you have 8, so you have a quorum.
Okay. Sounds good.
Thank you, everyone, for attending. If we can jump right into our third quarter performance, and have Kristen take over the meeting and start our presentation, I would greatly appreciate it.
Happy to do so, everyone. Good evening. So yes, we do have third quarter performance, and Sue, maybe you can advance one slide, please.
Okay.
Or 2 slides. Yeah, that's exactly where I wanted to go to. So, I just want to talk a little bit about the markets. Not long. I know you all have a long meeting, but just to give some indication, we have had quite a ride. We started off in January pretty strong in the equity markets, and then COVID hit and everything went down. We really had almost a pandemic recession, if you will. So the second quarter, going into the second quarter, or middle second quarter, I should say, was terrible for markets. A significant volatility moving out of that late stage cycle that I had mentioned that we had been in pretty much for almost 9 years, where equity was running. Very strong growth managers were doing very, very well. And then we had sort of a standstill where there was nowhere to hide. Markets were down. Private markets, however, did pretty well, mainly because you don't book them mark to market, right? So they are longer term investments. Their duration is 8 to 12 years. And so from that perspective, you didn't actually get a straight market value during this period of time. So having private markets in your portfolio would have helped the performance, where it hadn't in the past, I should say the recent past, just because the equity markets were so strong. So that's the landscape from which we have come. We've now moved into the third quarter. The third quarter was gangbusters again. From a equity standpoint, equities are back up. We had been continuing to be led by the growth managers, to the point where there's the question of whether value will ever come back in favor. And guess what? Last week we started to see some real reversion, started to see some of those value managers pulling forward, where we hadn't seen so much before. So that kind of brings back some thoughts around balance. Typically, we want to have a diversified portfolio where you have exposures to both growth and value managers. And I won't lie, a lot of the pundits had started to say that value was never going to come back, and maybe we should all be only thinking about growth managers. Well, you know what? Last week was some of the strongest value manager performance we've seen in significant amount of time. And so with that in mind, just thinking about how these markets are continuing to change. If you look at this slide, you see the VIX. VIX is the volatility measure, and so that was down, but you also see the dollar was down, and so that's sort of an interesting new development. Oil has been going up, as you can see now, but actually this week it's going down, because now that we're looking at some of the closures or impending closures. I don't know what's happening in St. Louis and Missouri, but I know today's the 19th, the 20th, tomorrow for us, we have a shift back into some of those closures as it relates to dining, dining inside of restaurants or any games, volleyball, like my daughter will know, yesterday was her last day of volleyball practice for, we don't know for how long. So really we're moving back, dialing it back, because again, I'm in Illinois, so we are one of the states that is having some of the highest numbers. I know in New York they've moved to full virtual school, and so we still have a significant concern about the virus, coronavirus, and how long it's going to be before we go back to starting to see some progress. Now, that said, we've had a lot of good news this week, in particular as it relates to some of the vaccines. So you have Pfizer, you have Moderna that are saying they have some 94 to 95% effective, potentially effective type of vaccines. So that's great news. But there's still that lining that while those are really going to impact should you get the virus, we don't have anything that is preventative, with the exception of wearing masks at this point. So we'll all be staying tuned to that, but that has an impact on the market. So with some of the closures, of course, the farm type of stocks are going up, but then also some of the technology, because again, people are going to be working from home. I mean, some of us have not stopped working from home, but there's going to be more of an influx in some of the states like mine, where they're asking, if at all possible, work at home. So that's a bit of the backdrop here. You do see in the credit market, U.S. Ag, which is the aggregate, high yield and EMD all being up in the quarter. So that's great news. You'll see that play out in your portfolio. So I just wanted to kind of touch on the markets. Also, maybe I didn't mention this. I talked about the S&P, but I didn't talk about the non-U.S. Non-U.S. has been positive, but not as positive as we have seen in the U.S., albeit the emerging markets area was up 18.1%. So again, there's still pockets of real potential there. We have known that the balance sheets in the emerging markets have been stronger than in the developed markets. But of course, there is the impact around oil and commodities, as well as flight to quality, which means that those managers or those markets are going to suffer just because of fear. And so we do see that there has been some positive returns here. Oh, so maybe we can move forward. I was about to push it myself. And Sue's got this. Maybe you can turn back for a second, one page. I'm not going to go through this specifically, but this is just a great highlight of what we've seen. I've said a lot of it, but if you want kind of a quick and dirty of what's happened over the quarter, I would encourage you to just read this, because again, it just will put you in the mindset of what's actually going on right now. So I wasn't going to go through it, but just wanted to highlight that. And we can move to page 4. This just gives you an index performance. So you'll see where we are through from June 2020, year to date, 1 year, 3 year, 5 year, and 10 years. So you can see where all the indices are. You can see in particular that 1 year when you're looking at the equity versus the credit, and the Barclays US Ag, went gangbusters. If you look at that 1 year number at 8.7%, that is extraordinarily well strong for a fixed income credit. It does indicate that there is some, flight to quality. If you go down, into some of the long treasuries and the like, again, you see some really strong numbers. TIPS had some strong numbers. So credit did pretty well over the year. 1 year in the equity still, suffering from some of the issues with COVID. So while we've bounced back quite a bit in a lot of the markets, that's something that we still are seeing. So we can are there any questions before I zoom through this? Okay, let's move forward, please. So this is your equity, your performance summary. So you can see where you're falling on a total top line. So for the month, we were up 4.3%. Your market value is a little over 800 million. So I know we're always trying to get back to that $1 billion number. We do have quite a bit of liabilities coming out, so your benefit payments, and so that's always going to be a struggle if we're not generating the investment returns to make it up, which is always going to be difficult because investment returns are just a portion of it. But what you can see is that your allocation index was up a little higher, so that meant some of your managers did struggle, and we'll go through that. And then you're really right on top of your policy index, 4.3 versus 4.4. That's negligible when we're thinking about the 3-month time horizon. It's a little bit more drastic when you look at the 1 year number, and so we can see at the bottom, where are some of the differences. And so if you notice that your large cap, your equity markets are up a bit, but your non-US in particular, 4% over. And I just highlighted how non-US did not do as well as your US market. So that was going to be a piece that's going to take away from that performance a little bit. You were right on top of it as it relates to your core bonds, so that's strong. But then when you start to move to your private equity, you see that you are trailing a little bit from your policy. And so that's something that we are going to be focusing on going forward in the next few months. We will be doing your asset allocation in January. That said, don't think that there's going to be a huge difference, because we do try to look at this on an annual basis so we don't have huge swings between where we are anticipating going or have been going from a target standpoint to what we'll see shake out in the coming time period. Real estate is in line too. So again, I think that some of the areas there's going to be equity and private equity that you're going to see a difference from the benchmark. We can maybe move forward to the managers. Okay, I just went through this, so this is just another graphic of your asset allocation. And this is just a change over time. So, and then, maybe I'll just stop here for a minute. That lighter green that you see towards the bottom, that's going to be your benefit payment. So that just gives you some perspective for those of you who have been on the board for a while and have been accustomed to seeing us a little bit closer to that $1 billion number. This really has a lot to do, as you see the increase in benefit payments coming out. And so that, is a challenge. It's a headwind to the portfolio.
So Kristen, can you identify, so your ending market value is what you're looking at, but your net cash flow, is that what you're saying they're referring to?
Yes. Yep,
Payments?
that net cash. Mm-hmm.
Thank you.
Mm-hmm. Okay, we can move forward. And we can keep moving forward to the next one. No worries. We can stop here. So you see a lot of red here, and that's, again, the indices did quite well, but let's maybe kind of take this apart a little bit. As you look down into your financial composite and scrolling down into your large cap equity, and you see, your large cap, when you look at just your straight large cap core, Russell was fine. It was the index though, so that gives you perspective that, the index fund was doing quite well. Maybe go to the next page. But when you get into your, managers like Edgar Lomax, struggled for their 3-month year-to-date and 1 year. This is a very different level of performance that we have seen from them. And so we knew at some point, they have been on high flyer for you all for a significant amount of time. So, no manager stays on top forever. So they are a value manager. So as I mentioned, value has been out of favor. They did really well over the last several years, despite that fact, but it does appear that it sort of caught up to them. So stock selection was a bit challenged here. So they just didn't do as well. We don't see anything broken with them. While they are red, like I said, they have performed for you all significantly. And so
Kristen, have we reached out to them? Have they sent anything? Obviously, we're not the only ones that are seeing red. So have we received any correspondence from them?
Well, we see, we get their quarterly information. So we have looked at that. There's not been any sort of special correspondence. But when I look through the attribution, Christina, I really don't believe that there's anything broken with them. I mean, happy to kind of reach out, but 1 year is still a very short period relative to the strength of the performance that they've had over a long period of time. And really, given that they've had such a strong run and the fact that value has been out for this amount of period of time, it almost feels as though, as we look at the data, because it doesn't appear that there's anything broken, that this is just a culmination of what we would have expected, quite frankly, 3 or 4 years ago.
And just for sake of education, can you explain what constitutes large cap value? What type of companies versus cap or growth values, so that the board gets a little bit understanding of when we talk about that?
Sure. So growth is going to be, like your high flyers, like your internet stocks, technology stocks, sometimes healthcare stocks. Value are going to be those that, maybe utilities, more defensive in nature. And, stocks where even if they have a growth component to them, they have been undervalued by the market for whatever reason. And so they're stocks that you are looking for that are either fairly or at a discount, that they're going to run up in the future, versus these high flyer growth stocks, which you are really saying, okay, they may be expensive, but I know that they're going to go further because of the area they're on. And in particular, right now, I would say like technology, computers, home computers, Apple. I mean, everybody's working at home. And so that there's going to be a demand for those type of stocks, as well as some of the pharma stocks right now, in particular, drug stocks that are looking to, address what's going on with COVID. So that just gives you a little bit of the difference. And so as you scroll down, you'll see, your Intech, which is a quantitative manager. They've done, decently. They've held their own as it relates to their absolute performance, but the Russell 1000 growth has been extremely strong. So when you look at, let's call it your 1 year, and for the 1 year, the Russell Growth Index performed at 37.5. That is phenomenal. Okay. So normally we would expect the index to be at the 50th percentile. You see there at the 30th percentile. So whenever you have that kind of market, and it happens time to time, you're going to see your active managers like the Intech, like TCW not do as well, because it's just very difficult. Now, TCW did do well, but again, I mean, from an active management standpoint. So the nice thing here is that you did have a high flyer in TCW. They, the stars came right with them. They've always been a strong firm, but, again, everything aligned well for them over the year-to-date 1 year and 3 year. And so you're seeing that performance, but again, 23% performance is very, very strong. And that's compared to 21% performance on the 3 year, and then 40% compared to 37.5. I mean, for 1 year, we would be so lucky for that to continue. That's likely not sustainable, but for today, we'll take it, right? It's added value to your portfolio.
Right. And when we look at performance and we look at benchmarks, we always want to be very close to the benchmark, if not beat the benchmark. However, a 10% 3 months return is pretty darn good, even though the benchmark did 13. I mean, I'd take 10% any day. So we have to put those benchmark and these colors in perspective, knowing that while the benchmark may have done positive or negative, you look at the actual return. And as long as that actual return is not negative, we're making money.
Absolutely. So maybe we can turn to the next page. Apologize, I have an angry puppy up behind me. When we look at the SMID cap, and you can see where we're sitting here, Westfield, Systematic, and DFA. DFA is going to be your quantitative manager. So they have struggled, my apologies, they have struggled quite a bit. But you know, Westfield has done well for you. See, they're kind of in that yellow component at 48th percentile. But again, when you take away the colors, as Christina just mentioned, and you're looking at these absolute performance numbers, they're strong. I mean, year to date, 12.4%, 1 year at 27.3%, 3 years at 15.9%. I mean, when we look at our expected returns over the next 10 years, we're looking at equities at 6 or 7% return. So these are just phenomenal returns. They really are. And so we want to be careful not to take on too much risk. And so sometimes the benchmark will have more risk in it than your active managers, which are really beholden to thinking through a strong risk framework. The benchmark just is an aggregate of the names, regardless of what that risk looks like. When we move down into the international portfolio, what's really sort of dragging that performance down is going to be that causeway number. And as you can see, that is one that I'm actually more concerned on versus Lomax. Now, they are value as well. And so value has been out of favor. So as we start to see us go into a value market, or at a minimum value doing better than it has been, we need to watch to see whether causeway starts to shore up. If it doesn't, then that's really a concern, because we have been in a market that has not been quote unquote their market. As we move into their market, we should start to see some more positive performance from them. And if we don't, then we need to start thinking about some actions.
Right. So Kristen, tonight, are we going to go over the watch list? And are they going to be on the watch list?
I think they are. And if
Well,
they're not, then we need to put them on.
Okay.
And I'm sorry, I have a lot of these, but I just don't remember off the top of my head. But we have the watch list on here.
Okay,
So
we'll get that then.
we'll get to it. Okay, we can kind of keep moving forward. So emerging markets here, again, we were trailing, though the absolute performance has been positive. You see in the 3 months, 7.2%. Again, the quantitative manager, which would be DFA, is what really underperformed this area. Invesco did, fairly well. And if you look at their 3-year longer term performance, they did excellent, beating in the 20th percentile. However, if we look at LMCG, you see that they've been struggling here, and we're getting out of them. So all in all, DFA and I would say LMCG are really what's hurt performance. I'm sorry, Sue, I was saying you can keep moving. Okay, so now we're going to be looking at your total global equity, and you can see where that is showing. And you see that we've, been, for the last 3 months, it's been reasonable. 1 year was reasonable. Again, that's going to be that's the exponents number. So all of that performance is not exponents. As a reminder, it is partially or a lot of it's going to be progress. So they have rejiggered the portfolio a bit. We talked about that last month. And then you just see the underlying managers and what their performance is. So that's good to, way we just like to know what they're doing, but it all rolls up to that top exponents manager of emerging managers number. We can move forward. This is going to be our fixed income. So you see the total fixed income is reasonable. Our core, the core fixed income is where you see quite a bit of red. But again, the absolute numbers, are positive. It's just that the index, as I mentioned, did very well. I mean, for the 1 year at 7%, that's a high flyer, quite frankly, more than we would have expected. As a reminder, our expected return for fixed income last year was right at about almost like 1%. Very, very low. So when you start to see 5%, 7%, those are pretty strong numbers. And that fell through, that followed through if you look at Manulife, Earnest, as well as Exponents, which also, you have a fixed income portfolio with. Those are the longer term numbers. Now, I don't like to hang my hat on shorter term numbers, but in the short term, over the last 3 months for the quarter, they did well. Exponents was in the first quartile with a 4.1 over 0.6 for the benchmark. So that was 350 basis points of outperformance. Manulife did well as also at 1.3%. Earnest was pretty much middle in the pack, but still posting positive returns. So again, the story can change very quickly, which is why I like to focus on the slightly longer term performance, because that is all the back and forth bounced in. When you look at your absolute return fixed income, Loomis has done really well. They're sitting, year to date at the 15th percentile. But if you see across there, you're, 3.3 for the month, 6.3 for the year to date, 7.2 for 1 year. Very strong returns, very strong returns. And we can move on. Tips is another area, as I mentioned earlier when I was talking about the portfolio on the market side. You have 3.4% of your portfolio sitting in the second percentile, year to date 9.3%, phenomenal. I don't want to be negative, but that's not something that you should, we would love to see that, but that's not necessarily the expectation going forward. So Neuberger Berman in the global multi-sector, again, for 3 months did well, but as you can see across the board, medium performance, very much middle in the pack. This is your multi-sector fixed income, so that's going to include a bit of emerging markets, high yield, as well as the core areas as within that portfolio. So it will also, like I said, include emerging markets. And then we have our full EMD market, which is emerging market. And you can see there, we utilize Lazard, and over the longer period of times, 3 years, still beating the benchmark. 1 year and year to date did very, very well, but did fall apart a little bit on the 3 month. So it'll be interesting to see how their performance pans out going forward. We can move forward. And then you have your total GAA, and we're still at about 5.7%. That's something that at some point we may want to think about collaborating or collapsing, excuse me, into one manager versus the 3. But we've already started to reduce the hedge funds. So, one step at a time. Again, this is going to be middle of the pack. This is the, take the handcuffs off, can go in a lot of different areas. It's helpful when you have a lot of volatility and the like. So.
Yeah, Kristen, let's add that to the agenda because we've had total GAA for a while.
Yes.
And, PIMCO, when we got into it, it was a high performing, it was just the market times, right? And these buckets are not that big. to have 3 managers.
That was what I was just highlighting, that
Yeah.
I think that if we continue to keep GAA, that we should really be looking at consolidating. We don't need Mellon, GMO, and PIMCO. PIMCO, while it doesn't necessarily play out here, has been a really strong manager. That's one I would probably lean towards, but we can have that conversation and run the analysis. GMO, historically, when you got in it, they were the fair weather, need to be in, and then Mellon kind of complemented it. And so we did a third, but again, your GAA numbers have come down considerably. If you remember this time last year, you were closer to 12%. And so I really wanted us to bring that down to 5%. And we can think about how the direction we want to go forward. And the reason I bring that up is because GAA, again, it has the opportunity to go in a lot of different areas. But your portfolio at this point is in a lot of different areas. The portfolio was very different when we got into it before, and when we got into GAA. And so now you're looking at something where, it's just a situation where you want to, just collaborate or consolidate, not collaborate. Maybe collaborate too, but I mean to say consolidate.
Well, we got into this in early on in 06, and we didn't have as much international equity exposure that we have now amongst different buckets. So we didn't have much emerging. We didn't have much global equities. And so we ended up going into GAA to catch us into this, to build this category. So I think we do have quite a bit of overlap with this category.
And I apologize if I'm thinking I have this new microphone that hopefully you don't get to hear all the background, but I have a puppy who has been beautiful all day long until I got on the phone with you all. I don't know if it's St. Louis or what, but I'm not really sure what's going on. So we can move forward though. So I'm gonna just apologize up front. It's not much I can do about it at this point. Hedge funds, happy to see the 3-month number looking a lot better at the 18th percentile. With 6.8% performance, but that's been an area that's been troubling. Interest, which has all the red, we are winding out of that, so we're still, we should be seeing when exactly we're going to be getting the final amount of those dollars. It's only 1.5 million, so that's just sort of that clawback waiting, the residual, I should say. And Grosvenor did really well, so that's great. They actually had a conference today that I sat in on, so they are, continuing to post strong returns, as well as White Box Multi-Strat Fund for the 3-month, trailing a little bit on the year-to-date 1-year, 3-year numbers, but seems to have come across some sort of rebound for the short term.
And again, do we know when we're going to get remainder from Entrust? I mean, it's only 5, but it's been hanging out there for a while.
It has been. So maybe I'll try to have Deanna check into that again, but they should be, maybe between Deanna and Sue, let me know if they send anything to you to let you know when they may be giving us the rest of that back.
Yeah, because if we got that in, in this, I doubt it'll be this calendar year, but in the next calendar year, hopefully, and based on asset allocation review, I mean, that could go probably straight to cash, given that we're over policy.
Agreed.
And I'm just mentioning this so that when we look at these reports and we look at where we are, percentage of portfolio is 6.3 and our policy only says 5. So that's why I make these comments that 1.5 million is really not going to make a difference, but it will get us closer to reducing our portfolio down to the policy amount that we've approved. And so once we review asset allocation, we'll go through that portfolio policy recommendations. And then that's, again, what gives Sue her marching orders on what to stay in and where to pull cash throughout the year to stay within our policy according to what we've agreed to. So I just wanted to bring that full circle for all board members.
That makes sense. You want to move forward? Okay, so these are going to be the private market. So it probably makes most sense, unless you have any questions, to do answer those questions more in the private market report, because the IRR is the more appropriate measure for that. So the rest of this really focuses on what we've already sort of talked about. It's just graphics in a different way. I'm trying to think of what page you might want to go to at this point. Maybe some of the going forward to the brokerage report and the watch list. So this is, take a step back. I apologize. If you go back just a little bit, I'm going to go over the high level here. Yeah, keep going. Yep, keep going. Just want to go. Yep. Okay, one page forward, because this is the October flash. So just to give you some perspective, this is the monthly. But if you look at your 1 year, you are trailing at 2.8 versus 4.2, but 3 years you're closer at 4.4 versus 4.7. It's going to be a lot of the same themes that we talked about going through this. But as you can see, when you look at the equity for just the month, we have had some dips where we were up for the quarter. So that just gives you some perspective on the differences. But the fiscal year, as an example, large cap growth still up 21%, but large cap value down 20%, which is why I said it's really important that last week we started to see the switch in the pendulum going a different way, because the difference, I mean, that's a 40 basis point, 40%, excuse me, 40% difference, 20 up versus 20 down. So, okay. So I just wanted to highlight that. So we can kind of move to so this is your brokerage report year to date as of 9/30/2020. As you can see, on the top line, the blue gives you the goal. So you have a total goal of 33.33%. And then if you go to the next navy, heavy blue segment, you see your goal for your international equity is going to be 10%. Fixed income is 10%, and then your global is 10%. And so you have, that gives you perspective on what we're trying to achieve. And if you look at the very right, year in 2020, you can see, that these numbers are actually higher than where you need to be in all cases. So that's good. So we can move off of that page.
Let's go back, Kristen. I just want to explain something on here for everyone.
Okay.
So when we go back and we look at Edgar Lomax is at 87% of their commissions, but they are a minority manager. So on here, Ernest Partners, Exponents, Piedmont, and Edgar Lomax are so those numbers we hope will always be above our goals. And then the other ones are non-minority managers. And I'm glad to see that we were always waiting until the fourth quarter reports to see if they were going to meet their numbers, which aren't very big goals, but at least we have something where we're holding them accountable. And even Causeway, who used to always be under the threshold, is now at 23%. So I just wanted everyone to know that the reason why some of these are higher is because they are minority managers. And so, so I just wanted to give everyone an explanation, and if anybody had any questions on this slide before we move forward. Go ahead, Kristen. Thank you.
Okay, we can move forward. So now we're at the due diligence report. As you can see, Grosvenor is on. So Grosvenor is being purchased. Or going public. I'm sorry, just sort of being public. Yeah, but they're going public. So they're very excited about that. We don't have any negative views on it, but anytime you have a change such as this, we want to acknowledge that and watch it to make sure there's nothing that is a problem. So it's news. It's beneficial to those who are in the position to gain equity, but we don't believe that it's going to change what they do from a portfolio management standpoint at this point, but we will be watching it.
And Grosvenor is a minority manager firm, correct?
No, No. They are not. They are a
Sure.
majority-owned firm, but they do what I call they're strong corporate citizens. So they really believe in making sure that there is access across the stratifications of their professional level stratification. So analyst, VP level, managing director level, and then executive committee. They are really good at making sure that there's representation at all of those levels of women as well as ethnic minorities. And they obviously have a few, like the advanced fund and, you know, some of their hedge fund products, actually across the board, some of their real estate products as well, that focus on diverse managers.
That's what I was, they do
Mhm.
have a for diverse managers. That's what I
Mhm.
was.
Yep, absolutely. So we can move forward. So these are private market reports. So maybe I just go through this for kind of high level, but just to give you some perspective on this page, you see your private debt, private equity, and total real estate. And so then you can see the commitment amounts for those programs. The pie chart are going to correspond to the valuation by asset class and then fund exposure by asset class. And so that can be a little bit different because sometimes the segmentation is a little bit blurry. So as an example, you have 8.9% in real estate by value from a valuation standpoint, like what it's actually valued at. But from an asset class standpoint, you have an exposure, you have 10.5%. So it's just a little bit different. We wouldn't expect to see it night and day, but there are always a little nuances. When you're looking at this, let me turn your attention to that since inception IRR. So if you scroll across to your right and get almost to the last of that, I guess it's the second box. If you notice that they're in 3 different boxes and you see the SIRR, so that's your since inception IRR. And you can see your total private debt is at 7.2. I don't know if that's an 8. My eyes need the bifocals. Your total private equity is at 10.48, and your total real estate is at 24.71. Now, your real estate is quite outsized. That's because Elm Tree had a very successful but early exit, and so you know they were able to turn around the performance there very quickly. Under normal circumstances, I would expect somewhere around a strong return would be 7, 8, 9%. So I just want to again manage expectations. I know we'll likely look at Elm Tree again. Whether they'll repeat that is, it would be great if they do, but that's not necessarily expectation. And don't want you to think that if a manager doesn't do 20% that they are a failure. That's just a phenomenal number, which we'll take again, but that's not that's definitely the outlier standpoint.
So Kristen, on this page, I wanted to have everybody look at the 4th column on the left. It says unfunded commitment, 44 million. That column is just to say that is what we owe the managers in this space. So that if somebody needed money to go buy a company or put into a manager, they have the right to call our money, basically our cash, when they need it. And so that's kind of like a liability for us that we haven't funded 44 million of our total. And now some of these will draw that money between 1 and 5 years from when we get into the fund. But I just wanted everybody to see that's not unfunded commitment. Just means that that's money that is waiting to be drawn. Some of them draw it completely. Some of them draw it at different intervals, but and some of them don't draw 100% of our commitment. So we don't know that. It's based on who we invest and what their needs are. So I just wanted everybody to just as we go forward to just kind of explain some of these things so that we can see that number will change every time we have a quarterly report.
Yep. So yeah, that's high level. I mean, again, I went straight to the since inception number. You can look at the quarter, year to date, 1 year, 3, 6, 5, 10, but these are long duration assets. And so that's why I like to go to the since inception. And as you can see, you've been in the these asset classes for a really long time. I mean, you see your private equity, you have even a 10-year return. So that just gives you indication. That is the longest private markets segment you've been in. Total private debt would be second. And then you're a new entrant into private real estate. You've been in real estate from a more of a REIT or open fund perspective for years, but we just moved into private real estate and it's adding value already. So that's the good news. Okay, we can, I don't know if there's much, let me see, maybe go to the next page. So yeah, so this is just a further breakout, just so you know, of the different strategies that you have. So buyout, direct lending, distressed, fund of funds, and the like. I won't go through all of those, but that's just what's embedded in this. So unless you have questions, I'll keep it high level for this discussion. Okay, so I kept it high level. So let me see, the only other thing that maybe I should touch upon, I think, Christina, you wanted me to touch on Vista, was that right?
Yes.
So maybe we can scroll forward to the private equity component. Let's keep going, keep going. Yeah, private equity, okay, so you know what, let's keep going. Next page.
This is just a detail by
Yeah, by funds.
fund and some.
Okay, you can, yeah, so if you go all the way to the bottom of this page, Vista Foundation Fund, we did in 2013. And you can see that we committed 5 million and unfunded is 2.5. So that's yet to be called. Sorry.
I said,
Sorry?
thank you. Eyes, we're getting there.
A little bit.
And so, you know, the paid in capital, what you've paid in has been, like I said, 2.4. And then if you move forward, you see you've paid in 2.4, but you've already gotten distributions of 932,000. So that means that your total valuation right now is, your valuation, I should say, is 5.12. So that means you've already made money. So your net benefit, which is important, is 3.6 million. So that's strong. And let me move this. Hold on. There we go. Your faces were blocking the end here for me. If you go all the way to the end and you see where your IRR is, you see that you've already returned an IRR of 14.27. So again, this is from a 2013 year vintage. So we're like 7 years in, and they've called close to half in. And you've already received a benefit of about 3.6 million. So just wanted to point that out. And the reason we're going through that, I went through the performance just to tell you that Robert Smith, who's the founder, CEO, has some significant tax situation. It appears that he has, he's allegedly has hidden money or income. And so they are and have been investigating him. It has had an impact on the funds. There are some people who are trying to determine if they want to continue to do business with him. It seems at this point he will be able to maintain his position as the leader of the organization. But of course, he has taken a bit of a hit from the perspective of, you know, this is something, you know, we all have to pay taxes. So anytime you don't pay taxes, that's a problem. But one of the reasons he's probably going to be able to stay in his position, he is fined. So he's going to have to, you know, pay back some fines, if you will, and some sanctions. But he has gone, for lack of a better word, turned state's evidence, if you will. And so there's a bigger gentleman who's now, his name is now evading me, out of Texas, who, so Robert Smith, excuse me. Robert Smith is a billionaire, and this guy is multiple billionaires, and he's who showed him the strategies, if you will. So they've been trying to get to him for some time. So if they're able to prosecute that, it would be, I think, one of the biggest tax evasion cases. So he has, like I said, turned state's evidence essentially, or tax state, whatever they call it when you turn evidence for the IRS, but he's going to help them in that case. So that is what is allowing him to sort of stay free and just pay back from a sanction standpoint. But he's definitely going to take a hit. I don't think that that changes his ability to invest, but we are watching it closely because it does have an impact when the organization is not 100% focused on what they should be, which is investing, because you have such a huge distraction such as this.
Right. So it's reputational risk that he's enduring at the moment. The staff and the management and everyone at the fund is still there. We have seen some outflows that are in the public media, that some institutional firms have just said, we just don't want that type of risk.
Yeah.
But I guess we could just put them on the watch list just to see how this all plays out, just to be safe.
Yep.
So do you know whether other companies are not going with him? I guess that was you, Christina, talking about someone who is not going to stay with them.
So I have a Google alert on my computer. So you enter a different words, key phrases, and I enter, some of our portfolio names. And every time there's a news article, it sends me an email and says, kind of, hey, so and so's in the news. Kristen, I don't have the ability to pull up that article that I sent. Let me see if I can.
No, you don't have to go into detail. I'm just wondering, have they lost 25% of their business as a result of this, or any significant?
Yeah, what outflows they have, if anything, they have indicated. I just saw an article that's, I can't remember the dollar amount, but we have, that was, that's the start. So what happened when I mentioned earlier that we had PIMCO, All Asset Fund? The portfolio manager that was there left, and we saw huge outflows of cash from being moved out of that fund. And then the co-portfolio manager remained and stayed, but then I don't remember what happened on that either. But when there is a switch or change, some funds are very conservative and they just don't want risk. And so we stayed with PIMCO. I think we used to have 2 PIMCO funds and we went down to 1. And they've been fine for us. But when you start to see outflows of cash for whatever reason, sometimes it's a new consultant that comes in and switches up the portfolio. 2, it could be performance for different funds, and then 3 is reputational or headline risk. And I think that's where this one is reputational headline risk. Risk. And so that's one thing I asked Kristen and I believe I sent it to, I'm not sure if Albert or Sue, just to see that if we see more outflows because of these personal tax issues that he's having, that we put them on a watch list and just monitor it. And so
we're putting them on a watch list.
Yes, so that's what I've asked to put Vista on it, more for reputational risk and headline risk, and see if we watch more companies divest from. But it is a private equity fund, so it's not as easy to get out of a private equity fund as it is like a mutual fund or a stock, right? So, I've never seen the contract. I don't want to see it, but I'm sure that there's some language in there that says unless it's, there's certain clauses that they can get, but some of them
Gotcha.
have. Mhm.
Okay. All right. Thank you.
So that's what I wanted to just highlight on to make sure we covered everything. I think unless there are questions, that really kind of concludes my report. I know you all have a lot to do, but the days that we don't have other things, I think it is good to kind of go through the performance report in a little more detail. So
So Kristen, did we have the quarterly report that shows the watch list by quarter per our guidelines? Do we have that one?
No, I don't think. I think we just have. Well, we had the watch list that we had where
No. What I'm talking about, which is the spreadsheet that shows every manager, how they've performed for the last so many quarters. And then you look at the red numbers, and per our policy, so many, we have to, per our guidelines.
Yeah, I remember that. You know what, Christina, we actually haven't done that particular report in a really long time. So I'll have to reinstitute that. I don't remember now why, but I haven't done that. Like, I think it's over.
Any that have been on watch list. So
we haven't. And I almost feel like Kristen Jackson, who's been gone from NEPC for a really long time, that's the one who was really doing that report. I'm not even sure that, I'm trying to remember. It's been a while, so we can, dig it out and survive it. But, usually there's a reason at the time that people didn't feel they needed to see it. So.
Well, and I think that for maybe, and I'll talk to Donetta and Sheila about this, is doing, really going through that report. If we can make sure it gets done for fiscal year end, so that we can talk about it in March. That way we can do a training in March and go over our watch list, so that everybody on the board knows what our policies are and how it relates to our financial reports, so that we can keep track on that. So
That's a good idea.
Sheila an email. You can coordinate with them for March to go over in our investment meeting that watch list. But we want to make sure that Vista's on it, and which is private equity. We've never had a private equity, but TCW, and looking at DFA to make sure that we, they're all going to be on there.
I mean, Lomac. Wait, TCW is doing really well. So not TCW.
I'm sorry. Who was I thinking?
Causeway.
Yeah.
Causeway is a challenge. Vista for organizational, Grosvenor for organizational.
Correct.
Okay. Well, that concludes my formal remarks, but happy to answer any additional questions.
Does anyone else have any questions? If not, Sue, is Justin ready for us to go into his meeting if we conclude this meeting?
I guess it's if we want to just go straight forward.
Okay. Yeah. So at this point, I'm going to call the investment meeting to a close, and I'm going to allow Justin to take over. Chris, so much for we kept it good. We kept
1 hour.
Yep. So I want to just wish, I know we can't travel or anything, but I just hope that you all have a really blessed Thanksgiving. And we'll see you on the other side of the holiday, however you choose to celebrate it, but safely.
You too, Chris.
Okay.
All right. Take care, everyone. Bye-bye.
All right, bye now.
Bye.
So Sue, I'd like to make a motion to adjourn the investment meeting.
I'll second.
Or who was that? Was that Sheila?
Yes.
Okay.
All those in favor?
Aye.
All those- Motion carries. Thank you. Justin, the show is yours.
Good job, Christina.
Thank you.
Christina, good job. 1 hour.
1 hour. Thank you.
Mm-hmm.
Justin, you're muted. You're muted, Justin.
All right. I pressed a button and I was totally out of the Zoom meeting, and I had to put the ID back in. Okay, let's call a Rules and Regulations Committee meeting to order, I suppose. And we just, we don't have to take attendance or anything, do we?
We would do roll again.
We do? Okay.
Yeah. Okay, I'll call the roll. Angela Banks.
Here.
Christina Bennett.
Present.
Joseph Clark. Darnetta Klingscale.
Yes.
Lewis Cross,
Present.
Sheila Goodwin,
Present.
Donna Jones, Yvette Levy,
Here.
Bobby Richardson, Albert Sanders,
Here.
and Justin Stein.
I'm here.
All right, so that's 8. Again, you have a quorum.
All right. I'm not exactly sure what I'm doing here, but are we going to take one rule at a time, I suppose, and see?
Well, I think we were going to do the training first.
Oh, are we? Okay,
Okay.
that makes sense. Okay, so we've already taken roll for this. So I'm just gonna ask Matt, who is, first of all, I wanna be sure you all got the rules and regulations that Sue sent out to us. Does anyone not have it?
I don't.
They were sent out on the 12th, is that correct, Susan?
Yeah, I can send it back to you, Sheila, if you'd like.
Please.
Okay.
Okay. And so that's what we're gonna do. And then Justin's gonna look at those things that we already have read, the changes, the proposed changes. Okay, so Matt, I'm turning it over to you.
Okay, thank you, Darnetta. At this point, I would recommend we go into closed session, and I believe Sue has the motion on the screen. So if someone wants to make the motion.
Okay.
To
Could somebody,
close.
could somebody read that for us?
All right, I will. To close the meeting and that all records and votes to the extent permitted by law during the closed portion of the meeting be closed pursuant to section 610.021, subsection 1 of the Missouri Revised Statutes for the purpose of having a confidential or privileged discussion with the attorney.
Second.
Okay.
Do we vote on it?
Yeah,
Yeah, roll call vote, please.
I'll call the roll. Angela Banks,
Yes.
Christina Bennett,
Yes.
Darnetta Klingscale,
Yes.
Lewis Cross,
Present.
Sheila Goodwin,
Yes.
Yvette Levy,
Yes.
Albert Sanders,
Yes.
and Justin Stein.
Yes.
All right, so you have the 8.
Okay,
All right,
so
well, let me pause the live stream here. So give me just a second for that.
Sure.
Sheila, I know we're live now, but we're getting a lot of feedback from you. Like every time you move or something, we get a lot of feedback.
Who is that, Dr. Sanders? Who's getting feedback?
From Sheila, every time she moves, we get the feedback.
Oh, okay. All right.
Sheila, maybe you should put your mic on silent. Mute it.
Okay. Is there a motion to end the meeting?
No, Justin has some stuff.
I think we're the meeting is, the Rules and Regulations Committee meeting is now in progress, right?
Okay.
Yes.
Yeah, we're going to discuss the proposed rule changes.
I'm sorry, Justin.
Right.
So,
Okay.
Does,
so we
Does
are
everyone-
live, so let me do that. Get those up.
get those in.
So these are the proposed changes from the last meeting.
Right. So if we've all read it, then right now, then Justin, we're just taking questions and again, because we did that in October, right?
I don't remember doing this in a meeting form, but I do. But is everybody familiar with the proposed changes?
No, I'm not familiar
Yes.
with some of them.
Close. Okay.
I mean, they were brought up or submitted by Christina. Do you want to give some reasons why we?
It was already done.
Yeah, it was already done.
Oh.
So this is just the first reading. So we
Second
presented
reading.
it, then this is, so that was, yeah, October 19th was the first reading, and then this will be, where we discuss it at the meeting, and then we take it to the next meeting for the second reading, but it should have, the flow is you present it, at a meeting, and then it goes to the committee for it goes to the board as a whole. But I can explain some of this if you would like.
Would anybody like an explanation?
Well,
For the section 2, the minutes, are you saying that someone else besides the executive director should be responsible for preparing the minutes?
So, for example, if the executive director cannot attend a meeting, right?
Uh-huh.
Then this allows one of our officers, one of our staff to be able to record so that we don't cancel a meeting because of that. So whether it is Terry, who comes to our meetings and as a member of the staff, or I think Brent, somebody could step in for Sue to record the minutes of our meetings in case an executive director cannot attend a meeting. So again, this is to not impede our business of meeting, and that we have the ability in our rules and regs to have a backup in
Okay,
case.
so as it stands now, only the executive director can present the minutes or record the minutes?
Yes,
Okay.
So this is basically a backup plan.
correct. It's just adding words here or there so that we don't impede business. Now, I've never had that situation occur, but we should plan for the future in case. And given definitely COVID, I mean, we just don't know, right? So it's good to have a backup, so that someone that Sue can train and that's the biggest thing, is can cross train somebody in case an executive director cannot make a meeting.
And I just have a clarifying question, and maybe this is what you mean. In terms of designated staff person, designated by whom? Designated by
The executive director.
Okay. And so if I may offer a suggestion, could it be or a designated staff person or a staff person designated by the executive director?
Yes. Should we put that in there?
That's if the board approves in such way, but that's
Okay.
a suggestion I have.
All right. So that.
Justin, you okay with that?
Yes, I am.
Okay, so we're going to add designated by the executive director. Is that right?
Right.
Okay.
A designated staff person designated by the executive director, correct?
Okay, right.
Yeah, or a staff person designated by the executive director. And kind of just a broad overview, sort of like what Christina mentioned, is the the committee will then vote on each of these changes and basically will recommend that to the full board meeting in December. Then in the December board meeting, the board will then formally approve the changes at that time.
Okay.
All right.
So probably what I would suggest is at the end of this portion is to go through the rules one by one and have the committee vote on them.
Okay.
So that then when it goes to the board, it's a recommendation from the committee.
Exactly.
Right.
Doesn't have to have a second, right? Is that
Well,
correct?
Well, the second board meeting in which it would be done by a 2/3 vote is the December meeting of the full board. So,
Yeah. So I guess my question is, and it's a parliamentary procedure question, is that when a recommendation comes from a committee, don't you treat it a little bit differently than other motions?
well, a decision, kind of what we mentioned before, a decision by the committee is not a decision by the board.
No, when it's presented to the board to be voted on.
I would
thought that-
agree with you, Donetta.
Yeah.
However, this is rule, these operating procedural changes are in our rules and regs on how to change rules. So while that would typically be for a committee, this format or policy that we have to go through is specified that it takes, that the committee meets and it takes 2 meetings to formalize a change in our rules and regulations. So this is a little bit different than just a regular committee meeting.
Because we're changing the rules. But
Well,
Yes,
it's a committee meeting, so a quorum is 4 people, correct?
right.
Right.
So,
And so we have to have at least 3 people?
right. So, but that would just be the decision of the committee, not necessarily, you would still
Right.
need to then vote on this, but it would just be simply adopting the recommendation of the committee at the December meeting. And then at that point, it would be by 2/3 vote. And at that point, the rule change would become effective.
Okay.
Right.
Right. But
Right.
this has to be vetted twice at 2 committee meetings.
Right.
And
Because
this is the
Or,
second.
well,
This
it
is the
technically doesn't
second.
have to be vetted by a committee at all. However, that's just the process we normally follow. For there to be further discussion on it, that's sort of why the Rules and Regulations Committee
Okay.
exists. Now, if the board decided, hey, we don't want to go through the committee process, we just want to do one regular meeting where it's read, second regular meeting where it's voted on, that could be done that way. But generally, the way in terms of discussing the actual rule changes is done at the committee level.
Okay.
Okay. So we did change the first one there to include the chairman deciding. How about the next rule proposed?
Okay.
so that what the intention of the second section 2 is so that we have 11 board member, that we do not have one individual or 2 occupying more than one officer role. So by default, right, wrong, or indifferent, at one point, we had the the chair of the board, also the treasurer of the board, and the investment chair of the board. So you had one person holding 3 positions on this board, on an 11-member board. So this gives us a little more protection, that we don't have the decisions weighted on one individual on an 11-member board.
Yes.
But I thought that the chairperson was the one who appointed, or the treasurer.
Right, but our rules don't. So Christina Bennett can be chairperson, and Christina Bennett can appoint herself vice chair or chairman of the investment committee, and Christina Bennett can appoint the treasurer as well. So in that situation, you wouldn't want Christina Bennett having three officer position or two officer positions and a head of a committee chair on an 11-member board.
Does
I
That's too
agree.
that's
the
too much risk in one individual.
I
Oh,
disagree. Not that it's too much risk, but the chairperson, like I said, nominates or appoints the treasurer, and
No,
in doing so, they
I thought that
They don't.
Matthew, help me
Sheila,
out here.
They don't appoint
hold
the
they
on,
don't
treasurer.
one at
appoint
a
it.
time. I'm sorry. Hold on,
Yeah,
one
They're
at a
just
time.
to
elected.
clarify, the treasurer is separately elected.
Yes, that's what I was gonna
Okay,
say.
all right. So the treasurer is separately elected,
Yes, in October of odd number years.
right? So is the
Correct.
chairperson nominating themselves to be treasurer?
They can.
I just kind of find it kind of
Well, I guess it's
redundant.
clarify. They don't nominate. Well, they can be elected separately, but they don't appoint themselves. They're just elected by the board, and they
Right.
can serve both roles at the same time. Currently, under the current rules.
And if
So
no
then
board member says anything, then it stays that way.
yeah, so the board members can just say, no, you can't be treasurer. I just it seems kind of redundant here. But tell me something, Matt. Are the duties of the office of the chairperson and vice chair and treasurer are they defined? Has it been said what their duties are?
The duties are set forth in the rule, and now there isn't a whole lot of detail about the duties of each, but there are the duties set forth in Rule 2 and actually specifically 3.
Mm-hmm. So I think it might be better if we just clarify and state the rules of not the rules, the duties of these officers, and instead, I just find it kind of a bit going around trying to say something that can be better defined by the duties.
But I think the treasurer, since it's elected, I mean, with the rule, the amendment to the rule, I think it'll stop the treasurer from being being the chairman as well. And I think what the rule helps regulate is that, like Christina was saying, we don't want three duties to one person. It's like having a vice president, a president, and the speaker of the house is one person, and we don't want that to happen. Basically, that's how it is. We don't want that to happen because we have an 11-member board, so somebody else should be able to be one of those people. So the chairman or the vice chair can't be also the treasurer.
Okay, well, two things here. If they can't, the other board members can step in and do something about it. And then the other way, if you define the duties of the requirement of each office, that would clarify that too.
Right, but if the amendment, if we pass, if we agree on the amendment, we wouldn't have to worry about the board trying to vote afterwards to try to stop them. Stop the. I mean, like a better term, stop them from doing anything. The amendment already states that they can't hold those two offices, so we wouldn't even have to try to regulate on what they're doing and keep it going. So we just if this amendment is approved, it stops that from even occurring. So we don't have to go back and correct me if I'm wrong, but we don't have to go back to say, oh no, you can't do that anymore. The amendment already says the vice chair or the chair cannot run as treasurer or cannot be elected as treasurer. So this amendment would stop all that, so we wouldn't even have to worry about it.
I just wanted to say that the purpose of placing these changes before the board was to systematically correct a lot of the things that had been acceptable for years. And so in this particular transition, I as of December, I was voted chair. but I was also, when I ran, I was the treasurer. So I just wanted everyone to know this is great. I wanted inclusion by everybody. I didn't want anybody to be left out, and that was the purpose of having everybody as co-chairs. And so I think this works
I'm
out
not
well also.
I do, just to clarify and on that one, it does. I mean, and I understand, because you were the treasurer elected in October, and then in December you were elected as chairperson. How and what the rules state that okay, you would have to relinquish the title of treasurer, or you have to choose one basically. What does is that what the rules amendment states?
By default, it would be.
Matt, is that what that says?
Well, it says that basically yeah.
Okay, so
So
once we adopt these, then we would have an election before October for a new treasurer. Is that right?
that'd probably be my understanding, yes.
So
Right.
will we do that at the December meeting as well?
Well, the rule change wouldn't become effective until the board approved it at the December meeting. So then probably it would be at the February meeting.
Okay.
Correct.
All right, that's fine.
But probably to make it cleaner, you could always just submit, let's say the rule is approved, submit something in writing just saying you resign as the treasurer. So that way it's vacant, and then
We could do it in December, or we still have to wait till February.
You could,
if you were to, let's say, resign, tomorrow, then technically, I guess there could be an election in December on the treasurer position. But
okay,
that wouldn't necessarily be dependent on the rule change. So,
okay, I got you.
But
It would be cleaner in December, Louis.
Yeah, I'm saying that if that's the case, then we can, I can make that happen, so we can make the change at the December meeting if that's what Matt's saying.
Yes.
I can do. Okay.
I mean, I'm not suggesting that you do one or the other. I'm just saying that if that were to happen, then it could be done then.
Okay.
Administratively, I just want to point out we do have Mr. Cross signing all our checks. So we just would need to make sure that, we've got some time to get that switched over. I think there's a process to get a signature and a plate made. So we would just need to have that in place so that we could continue to write checks.
And so this
so
probably
do we have more than one signature on it?
No.
Not on a check, but do we have more than one person able to sign?
To produce the checks, yes.
We have two people?
Yeah, within the office. So Terry, the accounting specialist, will prepare the checks and I will review them as well.
No, I'm saying like in some organizations, you have two people who can sign checks, not just the treasurer. So we only have one person who can sign checks, the treasurer.
Right now, it's the treasurer, yes.
Okay, that was
Chair, I think that's something we probably, and maybe not at this meeting, but that's something we need to look at.
Yeah, I would just suggest, given sort of the practical, sort of not even the consequences, but realities of with the checks, and certainly in the normal scenario, the election of the treasurer is done in October, so then there's about 2 months time, November, December, to get everything prepared for the treasurer to then take effect then. So, yeah.
And so many times it's the president and the treasurer, or the vice president and the treasurer, that are able to sign checks. You know what I'm saying? And you have to go through certain. Are you bonded?
Yes.
Treasurer bonded? So then
Yes.
one other person needs to be bonded, or at least that would be my recommendation.
But Donetta, correct me if I'm wrong, Sue, Lewis doesn't go in and sign the checks. The checks are printed by plate.
Yeah, we have once the treasurer is elected, you get the signature and then we prepare a plate. And then we have a little machine where then that signature is embossed on any checks that we create.
Okay, so that's different than what I was talking about. I was thinking that you had to contact, I'm on the ZMD board, and so, you know, it's multiple of us who can sign checks, so. Anyway.
However, Trustee Clinksdale, to your point, heaven forbid there is a situation where the treasurer cannot sign, then we have checks that are being signed and the treasurer could possibly be incapacitated. So we still would need to have a second signer, in my opinion, whether it's by plate or what have you.
That's a good loophole to
Yeah.
close up, Yvette. Good
Yeah.
point.
Yeah.
And that makes sense. That would make sense when the treasurer can't be the chairman, because maybe the chairman of the board
Could
can be
be
the
the
one.
backup.
Could be the backup.
Right.
But right now it wouldn't make. Right now it doesn't make sense because Lewis would be both of them.
Right.
But that's just something. I think that's why we should amendment 2. It really makes sense, and I think it reads correctly as long as unless we have assumptions about how to do it. But I think it reads correctly, and we should go on to the next one.
So I would just say that if Lewis were to, let's say, submit a resignation, perhaps it might make sense from a practical standpoint for him to submit, if he were to do that, a in the future resignation at a future date that were to occur. So then that would be after the election of the new treasurer. So then you would have a smooth transition at that.
Okay. I can make that happen.
There being a gap of which there's not one, then you make sure there's one.
Right.
And I just want to say, I am so elated that all of us are on this call. We're having these discussions because in the 15 years I've been on this board, we've never gone into this detail. And it is so comforting to know that we are all vested to try to understand these procedures and close up loopholes for our benefit. So thank you.
Very good.
So are we done?
Yeah,
So
one
the trustees
more.
want to make the chair a backup, and that's perhaps an amendment that could be prepared for a future meeting.
That would be good.
So the next rule amendment change, or the next amended rules, is section 1 of rule 5. And it says no later than February 1st of each year, the chairperson of the Board of Trustees shall establish committees to serve for the current year for such purposes. And it goes on and it says, if the February 1 deadline is not adhered to by the chairperson of the Board of Trustees, then the vice chair shall establish such committees to allow the continuance of business. And so my rationale here is that the board chair is elected in December, and we should not wait until April 1 to assign committees. And then this makes sure that a board chair cannot delay that action past the April 1. And so that we can continue business and allow the vice chair to step in if the chairperson is not at the February meeting, or if the chairman just doesn't want to appoint, and the vice chair would step in and say, this is where our rules say, if you're not going to do it, then I'll go ahead and appoint.
I just have a clarifying point. So Trustee Bennett, do you want the announcement to be made at the February meeting as to who the committees are and who the chairs of the committees are, or do you want that made prior to the February meeting?
So the committee chairs would be announced at the February meeting, because that gives committee chairs, 10 to 11 months to work, as opposed to, sometimes less than 9 and then sometimes less than 6 months to come in.
If I may offer a suggestion, I think right now the way it's written is February 1, which would be a couple weeks before the February meeting. So perhaps maybe if it was March 1, then they.
Well, no later than the February meeting. I'm sorry.
Yeah.
Okay. Okay.
Not so much the February 1st, but the February meeting.
That would be the third week in February, right?
Correct.
And sometimes
Okay.
it's later than that because there's a President's Day, but
Yeah, this past year, it was the very end. It was February 24th, so it was almost to the end of the month.
Okay.
Can we take
So-
Matt's suggestion and do March 1st? Just say March 1st?
Well, we meet in February as our
Yep.
first meeting of the year, so
Right,
that's
but
when
it's
you
February
would want it.
but it's the
Before
third,
the
it's almost the
February
end of
meeting.
February though, Chris.
Correct. And right now it's, I believe, April 1. So this gives people the ability to know, and then be able to move forward.
Okay, so, okay, I see what you're saying. So you would, the chair would make the appointments at the,
Announce the
February-
appointments at the
February
February
meeting?
meeting. Yes.
so that needs to be
Announce it.
changed from February 1 to the February meeting.
February, correct. Make the change from February 1 to the February meeting of
February,
each year.
meeting, and then appoint those chairpersons at that meeting, and they start serving in April. Is that right, Matt?
No, they start serving the day after our meeting.
right, it'd be
Okay.
basically
February.
immediate.
Okay, so
And
we
I would
change it
say
to,
no later than the February regular board meeting.
Right,
Okay.
that sounds,
all right. So Sue, can you make that change, Sue?
Definitely.
Okay, so that'd be consistent with the meeting. Otherwise, we would have had to call a special meeting for February 1st of February, before 1st of February or February 1st in order to do that, right?
Not necessarily, but this just makes it cleaner.
Okay,
Okay.
okay.
Sheila left, did she?
I think so.
Okay, we go on to Rule 6, Section 2.
Yep, hold on this one. So this one says basically the same thing to close the loophole. This one says that we allow the chairperson of the board to appoint co-chairs for each committee except him or herself, subject to approval by the Board of Trustees.
Oh,
So
no.
again, this allows each committee as a whole made up of the board, the chairperson of the Board of Trustees shall appoint a chairperson and or co-chair for each committee, except him or herself. So basically, again, this closes a loophole that the board chair cannot appoint him or herself to multiple or other committees to allow an inclusive nature of 11 members on the board.
Okay.
Had
Had that happened in the past?
Yes,
Okay.
where the
and-
board chair was the investment chair, and at one point was also the treasurer.
Okay. All right.
And then I guess the next one is something that, and maybe Sue, you can add to this, is that,
I'm sorry, I do have a question on that one.
sure,
Which was just in terms of the committee meetings shall meet from time to time at the call of the chairperson. Do you mean to say the
No.
chairperson and the co-chairperson, or like do
chair
both-
and or, yeah.
right?
yeah.
Do both have the ability to call meetings, or is it just one or the other?
Well, if I when I made the suggestion, it was the co-chairs will if there are co-chairs, that they will call the meeting. But I thought that we should have a specific time for that meeting, just like we have for the investment meeting. In other words, just like we have the investment meeting, we should have a meeting for each one of those chairpersons, and it should be in the calendar so that we have automatic meetings every period or whatever. So
right,
that
I agree with you.
Hmm.
Yeah.
Because right now those committees very seldom meet at all. In fact, very seldom. So that
And
was the
so,
purpose of the co-chair. Hmm.
right. And so like I said tonight, 15 years, we've never had a rules and regs meeting. The budget meeting is usually in the fourth quarter. We
Right.
really never have a benefits meeting. We basically call the meeting when the um, consultant comes in,
Right.
and a trustee meeting we have usually in the fourth quarter. But those aren't set, right? They're not set. So on some of these, you could combine them.
Well,
Um,
couldn't Sue just set up um a
The dates.
calendar for us of
Right.
when each, like the business meeting, there's a budget meeting, and there's training. Those are the two things that I know of. Is there something else under this other than the budget, under this business committee?
I don't know, but I think when you have periodic meetings on a calendar, I think things come up periodically that will go into the next budget, and instead of waiting until like we did this year until right before, we
Right.
could you could periodically have those budget meetings, you and Sheila, and then that way you would have a number of issues that through the course of the year you needed to address so that it would be a smooth transition to get those in place for the next budget.
Well, for sure, maybe, quarterly, or at least to just know where we stand and ask questions about where we are and where we're going. And
Exactly.
and I'm gonna ask that Ms. Banks, Trustee Banks, be a part of this committee.
Yes.
About
So
the, but if,
so
so,
Sue, is there a way that we could establish wait a minute, I'm sorry, Matt first, and Matt and Sue, can we establish meeting dates for all those committees through the court in a monthly or whatever
wouldn't
manner?
we, wouldn't we have to change the amendment because it says from time to time the amendment, from time to
Right, you
time,
would
we
need
want
to
to change
change
it.
the rule to basically mean, you would almost have to list a schedule for each committee as to when that would occur. So instead of it being, each committee shall meet from time to time at the call of the chairperson of that committee, which I think would be chairperson and or co-chairperson now, it would be basically, you would take that out and it would be set at a specific schedule, and that schedule may be different depending on each committee that there may be. And also, that may conflict with the, because basically the chair appoints the committees. And so the chair who's appointing the committees each year may appoint, generally the committees have been the same throughout the years, but there may be different committees depending on what the chair appoints. So that may not match up with that. But so then you may also need to change that
so,
rule as well. But if you
so,
want to have a specific schedule for certain committees, then that would need to be set forth in that rule.
That's what the intent was, to have
so Louis, how
scheduled
about,
meetings for every committee with the co-chairs for those committees instead of every now and then or never.
so
Well,
Louis,
what
how
I
about
have to
we,
say
Go ahead,
about
Chris.
that, oh,
I'm
go
sorry,
on,
Don.
Chris. I'm sorry.
so what I was going to say is, so the rules and regs, we don't want to maybe my recommendation is we don't want to boggle down the rules and regs with a set calendar meeting. But what we do is if you're appointing at the February meeting, the chairs, then at the April meeting or at the next board meeting, then allow the executive director with the co-chairs work to set a yearly calendar for the next 9 months already, so that the chairs get to select the meeting times as they need to on a need basis, but as well as on a quarterly basis for mandatory budget meetings or whatever that we know we're going to have to make financial decisions. So, for example, Sue could set the calendar come April 1 after meeting with the chairs and say, here's the meetings we'd like to have, and she presents that and her executive report to the board, and then we approve that, as opposed to putting those schedules in our rules and regs.
Oh, yeah,
Well-
we shouldn't have it in our regs. Could I
Well-
just
Yeah, I
say,
would just say you don't want to hem yourselves in too
Mm-mm.
strict, that there needs to be some flexibility there. So at
Okay.
most, I would probably say that the chair will meet with the chairs of each committee by April 1 to develop a schedule for the following year.
Okay.
that's good. So
I
the other
just,
thing is this meeting has gone on entirely too long. So I think we should figure out a different way to do our training. And
Okay.
I'll talk with Lewis, Chairman Lewis and Sheila and Angela, and we'll figure out something. But
Well, could we finish this meeting?
Yeah,
I'm sorry, Miss
we
Klinska.
got to get this finished. We don't want to have to schedule another rules and regs.
no,
no,
we
I
sure don't.
understand.
We only have 2 more amendments.
Okay. So how do you want to proceed, Darnetta?
No, keep going now. But I'm
Okay.
just saying that we had 3 meetings tonight.
That's
Right.
right.
And
So Sue, do you have the new wording for this one to add about by April 1st? We will have some kind of schedule that Lewis wanted in there, or that Attorney Gerst suggested.
Do we need to put that in this amendment about the schedule, or are we just going to?
Yeah, I think that I think the consensus was that they wanted to have the committee chairs, all co-chairs meet at a certain time or a month. Was that right, Matt? To establish a
April.
schedule for the year or whatever.
Well, I mean, it's up to you all. You know, I mean, certainly a committee chair can call another meeting later on in the year if need be, you know, but so, I mean, if you wanted to put in the rules that they will meet by April 1 with the chairs of the committee to develop a schedule, which may change as needed or something like that, that's something you could do.
Okay, is that acceptable to everybody?
Yes.
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 Okay, all right. Justin, you're the chair of that, but I was just, so, okay, then they'll establish some kind of schedule or whatever, how they want to meet. That's great. I just wanted everybody involved. I sat on the board a long time, and a lot of the people are trustees in name only. They don't really get involved, and they don't impact the board, and they should. And so that was my purpose. So that's
All right,
great.
Rule 8, Section 2.
Okay.
I think this one was just to have an annual report from the executive director. I don't think, we get the actual report, we get the audit report. But I don't think that we get, I'd like to see more robust reporting from the executive director. And I think that this would be something where if there's one document that we can take away when we're talking to trustees, to retirees, is that gives us a snapshot of a small booklet that we can take away that knows where we are, where we stand, and the questions that everybody asks, right? They always ask us, how much do we make in payments? How, what's our fund balance? And if we can do one concise report where each of us really can regurgitate all the things that are important to retirees, then I think that this would be a great report to have.
And that report is produced. It's a summary of what we call the CAFR, the financial report. So we do already produce that report. That summary now, it's, about 20 pages as a summary, because the larger report is more than 100 pages.
Correct.
So if I may make a suggestion, I think kind of like what Sue mentioned, the section 2F, that talks about an annual report, which is distributed not only to the members of the board, but also to members of the retirement system as well, which is perhaps thousands. So there is a summary that is distributed out. It's a little about 16 pages is the summary I looked at. So I think if the summary that you're speaking to, Trustee Bennett, is just sort of information provided to the board, I perhaps wouldn't necessarily recommend a rule change as to that, but perhaps there's some information that the executive director, separate from a rule change, can periodically give the board. So that way the board has the information it needs if there's any questions about sort of how the retirement system is doing in terms of investment returns, pension payments, things of that sort. Because I just don't want the board to be too hemmed in or limited as to either what the annual report will be or what's contained in it and things like that sort. And so.
Sounds good to me.
Okay, so how do we proceed with this then, Matt?
So
We can
right,
withdraw this if we want.
Right. And so I think if there is a information that just the members of the board want, that's something that can be handled with discussions with Sue.
Okay. Sue, is that cool?
That's perfectly fine.
Okay, so we're gonna delete that one?
Yeah.
Okay, and the
Justin?
final last one I
Alright.
have
Okay,
is basically the book that we get as trustees is it has all the information of every person that retires or whatnot. And I've gone around the country and I've asked, and maybe Sue, you can touch on this, is that as a, I'm not a teacher, I'm not a retiree, I'm not collecting benefits from this, but I would really not want my personal salary, benefits, and everything open to the public. And that's what we basically do now. We allow anybody who wants to go on our website and look at, what Jane Doe is going to get every single month when she retires. And she's put in a note for application for retirement, and this is what she's going to get. So if you go to any of our retiree systems in St. Louis, the Missouri State, the fire, police, I can't go in and find out what a police officer is getting on retirement. And so I think that the data that we get to approve should be for business knowledge, but it should not. But he really wanted it, they could request it through a sunshine law. And Sue, what did you do at the county?
Those records were open. I mean, your
Yeah.
salary, your pension is open, and you can go places now and find all of that information. Unfortunately, those types of records are open to the public.
Search St. Louis County and see what somebody retired and makes.
You can go to, there are websites, yes, we do. That is available in a lot of places. We have news organizations that report that, where you can go and search that information.
Right, but can they go to our specific, can they go to a specific retirement website and get it without third party?
So I think, Chris, correct me if you're wrong, you're saying that they retired from our retirement system and their information is on our website versus it's public, but you have to go and search for it. It's not sitting right on our website.
Yes, that's my biggest issue is, Yvette, if you retire tomorrow, I don't believe that myself or anybody in the public should be able to go to our retirement website and get your personal information. Now, if somebody wants to search it on Google or search it for a sunshine request or whatever, then so forth, do it if you're that. But to list your personal information, your years of service, the amount you're going to get every month, I think to me should be asked for, not just freely granted, given everything that else is out there. So I don't want to go.
So Sue, that's our question. In the county, can you just go to the website and pull up people's information, or is it under the sunshine law, or they can Google and find it, but we're not providing it to people?
Yeah, so it's the same kind of information. At St. Louis County, there are documents that are prepared for retirement. And so those are part of a meeting, that's part of the record. It's the same kind of deal here. It looks a little different, but it's the same kind of information that is available, open to the public.
And so how do they find it? Is it posted on the website?
It's like here where it's part of the board materials.
Oh, okay. I think that's what Chris was saying. Is it posted on the same website that they are receiving their pension from?
Yeah, it's posted.
Got it.
Yes, it's posted as part of the board materials.
So I guess we can put this in pending and move forward and come back to it at another meeting that Justin may not want to have. but I'd like to research a little bit more, given, technology wise and whatnot, what other people are doing, not just in St. Louis. So, I just want to
Agreed.
protect people's information.
I just
Agreed,
had a question.
Christine.
I'm sorry.
Agreed.
I just had a question. What do the statutes say? Because a lot of times it has to be public knowledge because that's the statutes of the state. So I just want to make sure we're in compliance or with what we're required to do.
Yep.
So
And I think we're saying that too, that it's still public,
No.
but does it have to be public on our own website?
I got you. What is it,
Yeah.
Matt?
And I can kind of elaborate on this a little bit. I've talked to Andrew about this a couple times. So basically, the information that is posted as a part of the meeting packets that are posted on our website, because we post the meeting packets on our website. And as a part of the meeting packets, sort of as we talked about earlier in the meeting, the board receives and approves and ratifies the retirement applications of all of the retirees who apply for retirement since the last meeting. And so the list of those applicants, basically their name, job title, information, salary, years of service, and what their pension will be, is included basically in a 1 or 2 page chart in the meeting packet. Now that should remain as a part of the meeting packet that is sent to the trustees, because the trustees need that information from a fiduciary standpoint in order to approve the pension payments. And I think the issue is, do those 2 pages specifically have to be posted on our website? And that's not really a legal question. That's just more of a policy question of the board as to whether you want to post those or not. Now, certainly it has to remain a part of the meeting packet that is sent to you all, because that's something you all need. But then whether it's posted on the website, now it is all public information.
Right.
So security numbers aren't included, addresses aren't included. It's all information that if I were to send a sunshine request, would be included in a response to the sunshine request. So it's all basically
Yes, and-
public information. Now, whether you take the affirmative step of posting it, those pages on the website, that's up to the board as a policy question as to whether you do that. And I think a lot of the websites, like I think the Post-Dispatch has a search system where you can search basically public employee information, where a lot of the same information may be. So there are databases where that can be
I'm
found.
back.
Okay, you want me to hang up?
Yeah.
But whether you actually
Yeah,
post on the
thank you.
website, that's for you all to decide. But basically, if the board did decide to do that, I would suggest that there doesn't need to be a rule change to do that.
Okay.
It could just be a vote that from here on out, that we won't affirmatively post on the website. It'll just be provided in response to a sunshine request or if the retiree asks him or herself. But I don't know if that necessarily would make a rule change to that effect. And it maybe could just be a formal vote by the trustees to that effect as well.
So that we're gonna
Okay.
void this out and then just Sue, you can make a note of it at the meeting, what we decided.
Yeah,
Is that right?
we can do a little bit more research too on, what other entities are doing on their own websites as well.
Okay,
Yeah,
so we're gonna delete this.
Right. We'll delete that.
Justin?
We'll revisit it at I guess the next meeting or a later time.
I
Okay.
agree. Well, I thank you for the
Everybody agree on that?
consideration. Yeah, thank you for the consideration because I don't mind listing, 44 people are retiring, but listing, Jane Doe's salary, it to me, to the public on our website is if people want it, they can get it, but just to freely get it, that's just something for me that I have an issue with.
Okay.
So thank you.
Was that the last one?
Yay.
Last one. That is the last one.
I have 3 more. I have 3 more pages.
So,
Oh, gosh.
Somebody say earlier we got to go through them to see if we approve to move them on to the next thing, to December's meeting.
Oh my God.
yeah, so
we don't
it
have-
might make sense if we just maybe, I think either you could do an overall, either 1 by 1 vote, or just vote on the 4 that are remaining just as a group, that as amended, they'll be moved to the December meeting. To, the committee recommends the changes in that were presented on Rule 2, Section 2, 4, Section 2, Rule 6, Section 1, Rule 6, Section 2, as amended and discussed by the committee, and then you could just do a roll call following that.
Okay, so can I make a motion that we accept the amendment changes -2? And do I have to specify what they are?
I can just say them and maybe Sue can write them down just so the minutes.
Okay.
It'd just be the changes to Rule 2, Section 2, Rule 4, Section 2, Rule 6, Section 1, Rule 6, Section 2, as presented and discussed to the committee and as amended by the committee.
Okay,
Christina Bennett seconds the motion.
Okay. Roll call then, Angela Banks,
Yes.
Christina Bennett. Christina Bennett,
Yes, ma'am. I'm here.
Darnetta Clinkscale,
Absolutely.
Lewis Cross,
yes.
and Sheila, I think, is back.
Yeah, I'm back, but I'm lost, so I'll abstain. I missed something.
Okay.
What are we voting on? So I'll abstain. Go ahead.
Okay. Yvette Levy,
Yes.
Albert Sanders,
Yes.
and Justin Stein.
Yes.
Okay, so then that is 7 yes votes.
Okay.
I make a motion that we end our meeting, the rules and regulations meeting.
A second.
All in favor?
Aye.
Aye.
Aye. All right, the meeting's adjourned.
We did a lot of work, y'all.
Yes,
That
we
was a
did.
lot of meetings.
Hey,
Yeah.
good night,
It
everybody.
was. It was.
Thank you, everybody. Good
Thank you.
Thanks for
night.
all your
Good
work.
night, everybody.
Night.
Happy Thanksgiving,
Happy
everybody.
Thanksgiving.
Yeah.
Thanksgiving.
Thanksgiving. Stay safe and mask up.
Matt, I'll call you tomorrow about that letter.
Congratulations,
about the,
Matt.
treasurer stuff.
Thanks, Sue.
Okay, yeah, we'll work on that.
It took a lot
All
of
right.
your work. Thank you.
Mhm.
Okay.
Thank you all.
All right. Thank you, Sue.
Okay.
Thank you,
Night,
Justin,
everybody. Sorry I had to
Darnetta,
leave.
Sheila, Christy.
Mm.
Bye-bye.
Right.
Yeah.
Take care, everybody.
All right. Enjoy.